Okay, so you flagged this ABC News report for us, and wow, that headline really kind of grabs you. Stocks plummet after Trump announces sweeping tariffs. It just feels like, he can't look away from the economic news these days without seeing some kind of major jolt.
Hmm.
So what we're really aiming to do here, based on what you sent over, is to properly dig into these new trade tariffs. We want to understand exactly what was announced, what that immediate reaction tells us, and, well, what the different expert takes are on what it all means.
Exactly. Yeah, you're looking for a clear understanding of President Trump's new sweeping tariffs on U.S. trade partners.
Yeah.
Right? You want to get that without, feeling totally overwhelmed by jargon or endless detail.
Right. Cut through the noise.
Yeah. Our mission here is basically just that.
Yeah.
Unpack the core of this announcement, look closely at that significant reaction on Wall Street, and then explore the complexities around how these tariffs are even being calculated, and also the very different political and economic viewpoints that are already bubbling up.
Okay. So let's dive right in then. Yesterday was the big day. President Trump announced these huge new tariffs, and the response from the markets was, well, to put it mildly, pretty dramatic.
Uh-huh.
The report points out Wall Street had a really rough day. The S&P 500, which just as a reminder, is a key measure of how the biggest US companies are doing overall, it had its worst drop since the pandemic crash back in 2020.
Wow, since 2020.
Yeah. And here's a number that really makes you sit up. One analyst, Alexis Christopher, estimated a $3 trillion loss in value in a single day. It's a staggering amount of wealth that just vanished.
It really is. And it was a very clear, very immediate signal of concern from investors about, the potential consequences of these tariffs.
Definitely.
What's particularly interesting, though, is how President Trump himself responded to this market downturn. He
Oh.
sort of likened the entire U.S. economy to a sick patient undergoing an operation
An operation. Okay.
and confidently stated that this would all lead to a booming country in the future. So it doesn't seem like he's interpreting that sea of red on the trading screens as like a major cause for alarm.
That's a pretty confident outlook, considering how the markets reacted. And it wasn't just Wall Street taking notice, right? There was immediate movement on Capitol Hill as well.
Yeah, that's right.
The report mentions a bipartisan bill introduced in the Senate. It would actually require Congress to approve any future tariffs. That really highlights the level of worry about this move, even across different political lines.
It absolutely does. And Senate Minority Leader Chuck Schumer, well, he didn't hold back at all, calling the plan one of the dumbest decisions ever made.
Oof. Strong words.
Yeah, that kind of strong and immediate condemnation from a leading Democrat really underscores the potential for, significant political repercussions down the road.
So the announcement hits. Markets react strongly, negatively. Politicians are already voicing serious concerns. Okay, now let's try to understand the tariffs themselves a bit better. President Trump used the term reciprocal tariffs, even mentioned a 50% figure. But the big question for anyone trying to make sense of this, and probably for businesses trying to plan, is how are these numbers actually being worked out? What's the method here?
This is where it gets really complicated. And as the report puts it, the explanation offered by the U.S. Trade Representative was one of the most incomprehensible documents ever to come out of the federal government.
Incomprehensible. That doesn't inspire confidence.
Not really. Now, while President Trump calls them reciprocal, it's important to grasp it's not simply a matter of looking at the tariffs another country puts on us and just, matching those. The formula they seem to be using, it attempts to take a broader view. It's potentially considering the overall trade deficit the U.S. has with a specific country and also what are termed non-economic barriers that U.S. companies might face in those markets.
Non-economic barriers. What does that actually mean in practice, like regulations or different standards, things like that?
Exactly. Think of it like this. Imagine a U.S. tech company trying to sell its software somewhere else. A non-economic barrier could be a requirement in that country to store all user data on local servers.
Okay, I see. Adds cost, complexity.
Right. Or, another example, different safety standards for toys that a U.S. maker would have to meet to sell in a specific foreign market. So the idea is to look beyond just the import taxes themselves. However, what's truly puzzling, as the report points out, are these instances of really steep tariffs being slapped on countries where the U.S. actually has a trade surplus.
Wait, surplus? We sell them more than they sell us.
Correct. We sell them more than they sell us, and that really throws a wrench in the whole idea of simple reciprocity, doesn't it?
It completely undermines that straightforward idea of just matching tariffs. And, the report includes a really significant detail. The White House has apparently acknowledged privately that there might be some mistakes in the numbers as presented, and that they could be adjusted before these tariffs are set to take effect, which, according to this report, is only 6 days away now, April 9th.
That private admission is quite telling, isn't it?
Yeah.
It suggests that even within the administration, there's maybe a lack of complete certainty about those initial calculations. And this lack of transparency, plus the potential for errors, are undoubtedly adding to the anxiety we're seeing in the markets.
Okay, so we've got a major announcement, a big negative market reaction, and a method for calculating these tariffs that seems, well, unclear, even maybe to the people implementing them.
Hmm.
Let's shift gears a bit now and talk about the why behind all this. This wasn't just a sudden, out-of-the-blue decision, was it? What's the underlying thinking?
No, you're absolutely right. It's not sudden. The core idea, this belief that the U.S. is being unfairly treated by its trading partners, there's been a really consistent theme in Donald Trump's rhetoric for a very, very long time. Goes back well before his entry into politics. The report even suggests that this view might be a more central, more enduring part of his platform than even his stance on immigration. It seems to be a deeply ingrained perspective for him.
Okay. And what about the White House's perspective on that negative market reaction? Did they see this coming, or is it something they anticipated as just, part of a bigger plan?
Well, the message coming from the administration seems to be that they expected some short-term disruption. They're kind of framing this as a temporary downturn that will ultimately lead to a much stronger, more prosperous U.S. economy in the long run because of these tariffs. They appear to be taking a long-term view, or at least, that's the story they're putting out there.
Okay, so that's the administration's rationale. But what are the broader political and economic takes on this? The report brings in several different voices. Let's start with the Democratic perspective, represented by Julie Roginski. What's her analysis?
Roginski is quite direct, yeah.
Yeah.
She argues you simply can't gaslight the markets or, the consumers who will inevitably see higher prices for everyday goods.
Right, the pass-through costs.
Exactly. When tariffs are imposed on imported goods, businesses will likely pass those costs on to consumers. You'll see it in the price of things like iPhones, groceries, even toys. She also emphasizes the potential impact on people's retirement savings, their 401ks, saying those losses are real, they're tangible. Her prediction is basically that the Republican Party could face significant negative consequences at the polls as voters feel that economic pinch directly.
So she's drawing a clear line. Tariffs lead to higher costs, potentially hurt retirement savings, and ultimately could mean political trouble for the Republicans.
Okay. Now, what about the Republican perspective through the voice of Anthony DePasito?
DePasito acknowledges the market volatility, acknowledges the likelihood of increased costs for goods, but he stresses that President Trump made this trade policy a central part of his campaign platform. He's arguing it was necessary short-term pain.
The short-term pain for long-term gain argument. Precisely. Short-term pain to achieve long-term economic stability. He believes the key here is for the president and his administration to consistently and clearly explain the rationale behind these tariffs to the American people. Manage expectations, push back against what he likely sees as negative or alarmist narratives.
So from that side, it's about reminding voters, hey, this was part of the plan, and communicating the supposed long-term benefits to get through any short-term discomfort. Okay. Now let's look at the more critical perspective, outlined by Crispina Sins Ramirez. What are her main concerns?
Ramirez raises some really fundamental questions about the strategy and, well, the potential consequences. She points to the absence of a clear, coherent plan. She's questioning the logic behind the specific tariff percentages, the timeline for implementation.
Right, the fuzzy math we talked about.
Yeah, exactly. And what's striking is she highlights how this particular move seems to have united economists from across the political spectrum in opposition. She mentions the Wall Street Journal editorial calling it the dumbest trade war ever, and Robert Reich's concerns about the negative impact on working-class Americans.
So a broad consensus among economists against it.
Seems that way, according to her point. Her core argument is that if the goal of these tariffs is really to create good-paying jobs and boost domestic industries, then there needs to be a corresponding strategy, a plan to actually invest in those industries, protect labor unions. And she argues that such a plan is just conspicuously absent.
So the critical view is this is potentially damaging, maybe ill-conceived, and lacks a support plan to actually help American workers. It's likely to just lead to widespread negative economic effects. That's a very different picture being painted.
It is very different. You have the administration arguing necessary painful step towards long-term prosperity. Democrats forecasting immediate economic hardship and political fallout. And critics questioning the entire foundation of the policy and the lack of any accompanying strategy for domestic growth. Quite the range of views.
Yeah, definitely. Now, the report also touches on this idea of negotiation. Tariffs, they're often initially presented as a tool, right, to gain leverage in international trade talks. But what's the feeling about that possibility here? Is this seen as a negotiating tactic?
The sense seems to be probably not, or at least not a standard one. Carolyn Levitt is quoted saying, "This isn't a negotiation, this is a national emergency." That suggests a much more confrontational, maybe less flexible approach.
National emergency.
And Howard Lutnick apparently doesn't think there's any chance Trump will back off
Yeah.
from these tariffs. So the indicators point away from this being just an opening bid in a negotiation.
That paints a picture of a very firm, perhaps even, unyielding stance. What kind of predicament does this potentially put President Trump in himself?
Well, this raises a critical dilemma, doesn't it? If President Trump were to reverse course on these tariffs now, he could be perceived as weak, maybe even create further instability in the markets. The report notes John Katko suggesting something like that.
Right. Flip-flopping could be bad, too.
Exactly. But if he sticks to this plan, he risks causing significant damage to the U.S. economy and potentially hurting his own political standing, especially with upcoming midterm elections. The potential for negative economic impacts in those closely contested districts is very real. It's a very delicate balancing act for him.
And the report briefly mentions President Trump's support for the Senate tax cut plan and the reconciliation process in Congress. How does this fit into the bigger economic picture we're discussing?
Well, it just indicates that these tariffs are likely just one piece of a broader economic agenda the administration is pursuing. They seem to be aiming for a combination of changes to trade policy alongside tax reductions. The reconciliation process in Congress is significant because it allows certain types of legislation, like tax bills, to pass the Senate with just a simple majority.
Sure.
That's a big advantage given the current narrow Republican control.
Okay, right. So it's part of a wider strategy. Well, we've covered a lot in this deep dive. We looked at that immediate shock to the financial markets, the really unclear details around how these tariffs are even being calculated, the long-held economic philosophy that seems to be driving this policy, and the very different reactions we're seeing across the political and economic spectrum. It's pretty clear from this report that this is a major development with the potential for really far-reaching consequences.
Absolutely. We've tried to pull out what seem to be the core insights from the report you sent over, highlighting those key developments and the contrasting interpretations of them. What for you stands out the most from all this?
For me, it's that combination of the sheer scale of the market reaction, that multi-trillion-dollar drop, is just mind-boggling, coupled with the fundamental lack of clarity about how these tariffs are actually being determined. That level of uncertainty around something with such potentially massive implications for the global economy, it feels incredibly significant and honestly a bit unsettling.
That's a very insightful point, yeah. The opaqueness of the methodology, it definitely breeds uncertainty. Makes it extremely challenging for businesses to make informed decisions,
Yeah.
for investors to assess the true risks involved. It creates a lot of fog.
Exactly. So as we wrap up this deep dive, here's maybe a final thought for everyone listening to consider. Given this lack of a transparent formula behind the new tariffs and these sharply divided opinions on their likely effects, what are the potential long-term consequences for global trade relationships for the U.S. economy, regardless of the intended outcomes? Are we maybe on the verge of a fundamental shift in how countries interact economically? And, what might that actually mean for our daily lives in the years ahead? It's definitely a situation to keep watching closely as things continue to unfold.